Hello, everyone. It's me, Richard. Today's January 31st, 2021. I wanted to post a video regarding Dogecoin and some headline news regarding cryptocurrencies and also silver. And I want to touch a little bit upon the purchasing power of a dollar just for a couple of minutes. I want to get into all of this in my future videos. So, I mean, really, I truly have 40 plus years experience of life experience, and I've seen it all. I like to share them with you so that way my life experience can, hopefully you can take something from it for you to have a better understanding of the reality around us. So please subscribe, hit the like button. And share with your friends and family regarding my YouTube channel. And also you can click on the hyperlink under Richard Be Happy, and you can see all my previous videos. I'm really aiming to post 3 videos a week, but I will get this one done tonight and provide future videos with more in-depth analysis and so forth. So today, we actually culminating up through today, Sunday, we had a very a fortuitous spike in Dogecoin all the way from Thursday of last week. So, Dogecoin actually hit 8 cents a unit. And so, and then it went down several hours after. Tonight, it's about 8:03 p.m. Pacific Standard Time. It's around 3.7 cents per unit. And I just wanted to go over a 5-year trend on Dogecoin. So you can see here on Dogecoin going back to April or even March 2016, you can see that it was a fraction of 1 cent, 0.002. And it stayed flatline all through 2017 and 2017, January 5th, 2018, it went up to 1.7 cents. Then it went down. And then all the way through 2018, it had its ups and downs. And all the way, you can see that it's hovering around, not even 2 cents. It's a fraction of a cent. Until just recently, last week, it went up to 8 cents. I can say that last Thursday, there you go. Last Thursday, it hit 8.7 cents, and then it went down. So, okay. So what so this tells me that Dogecoin could it can hit $1. And let me explain to you why I believe that. Okay, so this is coin market cap, and wow, I think a lot of you know what's happened recently. I don't want to take too much time on it. Wall Street Bets got into Reddit. A lot of readers on Reddit, the powers that be, got into pumping up GameStop, AMC, and a lot of it also filtered down into Dogecoin, where there was a tweet from Elon Musk. So, here, Wall Street Bets is ranked at 0. I don't know why it's up there. It's got a $24 billion market cap, but it doesn't tell me anything why it should be ranked up there. Accordingly, Bitcoin is ranked. It's still hovering around 33,000, and it's got a $625 billion market cap. That number actually went up. I think it went up as high as 655 billion last week. It dropped down to about $590 billion. So there was a lot of swings as far as market cap. So then Dogecoin it went up. Here it's ranking 14, Dogecoin, 3.8 cents. And it's got a $4.7 billion market cap. So it's trading at about 128 billion units. Regarding the Dogecoin market cap, it used to be $300 million when I showed you in the graph here, going back just 2 years ago, 2018. So just to give you an idea, we're going back on this timeline, 2018. So right around this time period, it was about $300 million, not billion. Then I think about a year and a half ago, it went up to about $800 million for market cap. Now it's at 4.7 billion. Now, on Thursday last week, when it went up to 8 cents, I was looking at these numbers, and it was over $4 billion. And then it yesterday, it went down to about 8 billion dollars. So there was a lot of hundreds of millions of dollars going in and out of Dogecoin. So although Dogecoin is, I think it has a highly efficient blockchain programming language, and it does have unlimited supply, but to generate the amount of supply, it takes time. So it doesn't happen at the flick of a switch. So then, I want to make this fast also. Visa, credit card, Visa, they have added cryptocurrency to their payment network. And this was published on yesterday. So we've got Visa in the game. Visa CEO Al Kelly said that payment giant is in a position to make cryptocurrency more safe, useful, and applicable, and may add them to the company payment network. So this is a good sign that more and more of these big hedge funds are going to push the value of particularly Bitcoin higher than what it is now. And I have a feeling it's going to go up this week. And the reason why I said that is because of all this hedge funds or like Wall Street investment associations are looking for high returns with risk. I'm not saying that Bitcoin does not have risk. It has a lot of risk because it's not pegged to an underlying value system such as gold or silver, or even real estate. It's purely electronic, and it is controlled gambling. So with all the hysteria going on with, Wall Street Bets, GameStop, AMC, and all this thread lines within Reddit targeting other investment vehicles to pump up and then dump in order to gain profits. Washington, here's an article on the National Review. They indicated on January 30, which was yesterday, Saturday, that Washington threatens Wall Street with action after GameStop trading restrictions. So what happened is that all the trading apps froze your ability to trade when you wanted to sell and also when you wanted to buy. So there's a lot of manipulation as far as trading cryptocurrencies. And under particular scrutiny is the trading app at Robinhood, which on Thursday restricted buying or trading in GameStop stock and other stocks caught up in the flurry of activity. The popular stock trading app informed users that they could close out positions on highly volatile stocks but could not purchase additional shares. So Robinhood has about 13 million users, which was a key tool in efforts by a group of Reddit users from the subreddit Wall Street Bets who plotted to push the stock of GameStop and other companies higher in an attempt to undermine traditional Wall Street hedge funds that had shorted the companies. Several hedge funds have already seen major losses in the wake of the chaos, including Citron Research and Melvin Capital, which was forced to obtain nearly $3 billion cash injection to cover its losses. So what that is saying there is that since these investors from Wall Street Bets, they got in, they pumped up the stocks, particularly GameStop and AMC, drove it up to over $300 a share, and you have these companies such as hedge funds, Melvin Capital, which they short companies, and so when they short, they're forecasting that the stock will drop down in value and they make their profits that way. So you could make money as stocks go up in value and also when stocks go down in value, and it's called shorting. And then also trading on margins is another way of investing in stocks. When you see that the stock is going up a certain percent, you can ask your brokerage firm to give you additional shares based on a margin, and then you would have to pay that margin at a future date, regardless of what that value of that stock is. So you could lose on a margin call. Again, please subscribe to my channel, please. I would really appreciate it. And I would like to share you my in-depth knowledge. Contrary to what these other YouTubers are, clamoring about, I used to save my pennies 40 years ago. I used to collect, and I still have them, Indian head pennies, 100% pure copper. So I look at a dollar doesn't buy what it used to buy 40 years ago, and so anyways, I'll touch upon that in just a second. But okay, moving on. So there was a lot going on. There was another article. Oh, there we go. So I discussed about Visa getting into the mix, and let me wrap this up discussing about the purchasing power of a dollar, a US dollar. And I think as people have jobs, they don't have to worry about, they do worry to some extent, but they don't have to worry about how much their dollar is buying. And for me, I always worried about it. I used to remember my father used to complain about when a dollar was a dollar, and that was going back to the 50s and 60s. And the sad truth is that over the course of time, the purchasing power of the dollar has weakened so much that the value of the dollar has to be manipulated. There is a thing called the CPI index, and the CPI index has several different weights attached to it, and that indicates how much inflation has increased or decreased from month to month. I'll do a CPI index card analysis with the labor board, or actually the labor statistics board. I'll do that in this week. I promise you I'll get that to you. I also promise to get you stock analysis about beta correlations and how you can measure or compare that to cryptocurrencies. But at any rate, stocks and cryptos are really two different animals. But I just want to go through all of that to show you what your expectations should be, when you invest in cryptos and investing in stocks. And so going back to this purchasing power of the US dollars, in 1900, $100 bought you so much on this graph. Over, 120 years, it's down to $3.06. Okay, you see how much so if you have $1, or if you had $100, you could buy, let's say, 100 units of bread, loaves of bread. Now, in 2020, it's with $3.06 as your purchasing power, you could only buy 3 units, loaves of bread. Purchasing power is what your dollar can buy over the counter. You go to a grocery store, you're buying milks and eggs and bread. It's not free. They're not going to hand it to you. You have to go and earn your dollar, and buy your necessities. What's happened is the purchasing power, and I mentioned this about the inflation and purchasing power in my last couple of videos. Please hit the hyperlink and please watch my previous videos, because I'm trying to get a message out there. The real demon in economics, which they don't teach you in school, the real demon, the devil, is inflation. And so, like I said just a couple of minutes ago, people go to work. They're not really thinking about how much their dollar buys. You fill up at a gas station, you're paying $2.80. The next day you fill up, you're paying $3.05. It can double. It can go from $3.05 to $6.10 overnight. And that kind of crazy scenario happened with the OPEC trade embargo on oil in the early 70s. And then President Jimmy Carter, also in the late 70s, tried price fixation, where prices were set at a limit to purchase commodities. That did not work. So when the government steps in to set price limitations on how much a store or a gas station can sell units of goods and services, that did not work, and it failed. So they were quickly to reverse their price limitations on goods and services back in the late 70s. But prices, inflation is wicked. And what's happening is that we've had a couple of stimulus packages, April of last year, 2020. And we recently had another $900 billion earlier this year. So now our President Biden is planning to kick out $2 trillion. So what happens is you have influx of supply of dollars purchasing so few goods and services. So it's all about supply and demand and macro and microeconomics. And I keep harping on this. So when you have supply and demand, the supply and demand curve. Okay, so when you have supply and demand, I'm trying to get to the graph. Here you go. When you have supply and demand, as the price from 0 to 30, price per unit is goods and services, is at 30, and there's only so much, there's only 3,000 units that price per unit can purchase. There's an equilibrium here. Right here at that point, right there in that middle of that X. But there's always, with economics, it kind of measures forces beyond our control. And those forces is what's happening worldwide. We had the pandemic, and then the United States government stepped in to keep everybody afloat by having CARES Act, and with pumping the economy with dollars. That's great. But at some point, we got to get our jobs back, be productive, pay taxes, and be put back into the system what the government's put in. I hope that can happen sooner than later. But regarding this equilibrium price, is that as the price per unit goes up, let's say 40, you can only buy fewer goods. You see that right there? It's 2,000 if it goes up to 40. If it goes up to 50, you can only expect to pay that many of goods. So as you go down here on the demand curve, with the price, you can buy more with more goods. And in a way, this kind of represents the purchasing power of the dollar. You got to think of it this way. Back in the 70s, $10 used to buy you 5,000 units of goods and services. Through the course of time, it's the purchasing power has decreased. Prices go up, and you can only buy fewer goods and services. So I want to do another video because I got to keep this short. It's about 21 minutes. There's other effects with the supply and demand curve, and I'll do that another video with that. But keep in mind when you go and spend your dollar, keep this in your mind. It's a supply and demand curve. People want to live their lives like today's you got to have a balance in your life. You try to save 10% and invest, so that way you can when you invest, you're staying ahead of inflation, which is the real demon. So keep this supply and demand curve in your mind when you go shopping. Look at how much your dollar is buying, and notice how much fewer goods you're able to buy. And where it used to cost you, $1.50 to buy a dozen of eggs, now you're spending $3. Yogurt, down at the grocery close to me, I can still get them at 10 units of yogurt for about $5. I'm afraid that's going to go up. So what can you do about this? If you're asking me, I don't know what the answer is. I really don't. The government also has no control over inflation. The CPI index is manipulated, and I like to do a video, like I said earlier, how the CPI index is measured. But it used to be a measure of a lot more goods and services back in the 70s, whereas they've taken away a lot of the goods and services and have downsized it down to a few goods and services, and they've weighted it. They've attached weights to it where the CPI has been watered down. So if you're thinking that CPI is about 1%, 2%, it's really like maybe 10% higher than 10%. We're not seeing it legitimately. But at any rate, keep this in mind. I'm just trying to, share my understanding of what I see about. You buy the things that you need to buy in order to get through the day, but you gotta have you gotta have. I'm not telling you what to do. You try to save, you try to invest, and also have a balance in your life, and have a good time. You got to live your life. But the theory of economics have been, you have the Keynesian theory. There's different theories involved with that too, about money supply. And I promise I'll do a video on M1, M2, M3 money supply. But this here, the supply and demand curve graph, is actually what you see here as far as the purchasing power of the U.S. dollar. So whereas 1900 it bought so many units, now 120 years later, it's down to $3.06. Now I don't have to go far back. I mean, I can go back, 2010 or 2000. Things were a lot cheaper than what they are today. But if I go back to 1970, throughout the 70s, and I lived in Los Angeles in the 70s, things were a lot cheaper. And look how high it used to be as far as a graph curve shows. It's a lot higher. $20 is a lot higher than what it is today at $3.06. And I'm not saying that this is purely accurate, but it's just an idea, a graphic illustration of what it is. I truly believe that the purchasing power is really, really low, a lot lower than $3.06. So because you can't buy anything nowadays with just $1. You've got to have, everything is costing you to buy a unit of goods or services. You got to have $5 in your pocket. And back in the 70s, $1, you could have bought a couple of units for $1. I remember coffee being 35 cents. So I'll go more into that later. Okay, so thank you for your time, your valuable time watching my video. And please subscribe and like my channel. I truly hope that I'm sharing something that you can take away and have a better understanding, as you choose. Thank you and have a good night.